I won't stop till I hear him say,
Profitable traders understand that they are always battling themselves in the market. Okay, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. In today's video, I'm going to be sharing with you all a Zoom recording that I had in our private community with the CYPRX students, breaking down a trade entry that I gave to the CYPRX students way ahead of the curve in our private GBP-JPY group chat. With that being said, as we're going through this deep technical analysis dive, make sure that you all are taking notes so that way you all can go in the live market and test some of these methodologies on a demo account, proving to yourself that some of the methodologies that we teach here at CYPRX via our technical and psychological analysis actually work. If you all enjoy deep technical analysis dives like this, make sure that you smash that thumbs up button, subscribe to the YouTube channel. We do appreciate the love and the support. I've had multitudes of people ask me if we're going to have any Valentine's Day discount codes. With that being said, I will display a Valentine's discount code here for you all today. You all can take it upon yourselves to head over to our website, cyprx.teachable.com. And if you're interested in enrolling in our mentorship program, you all can use the discount code to give yourselves a little bit of a Valentine's Day discount. With that being said, let's head over to the charts and break down this technical analysis trade entry that we caught here on GBP-JPY in the CYPRX group chat, calling it out to the students way ahead of the curve via our psychological and technical analysis. As always, I appreciate the love and the support. Let's head over to the charts. So we're going to be going over the GBP-JPY trade breakdown and the analysis that I sent you guys last night. I'm going to show you guys where I entered in at during London session. I stayed up for this trade. Here you guys can see at 8:12 p.m. PST. So that's roughly about 3 hours before London session starts here in California. I gave you guys this analysis. I said to you all, for some reason my screenshot didn't go through, but I'll show you guys my charts here in just 1 second. I said to you guys, bullish targets are 159.300. A firm break and hold above would lead us into revisiting the 160.00 psychological levels. Obviously, of course, GJ is floating well above that right now. We're hovering at roughly about 160.500 psych level. And I said GJ needs to sustain a bullish hold above the 158.300 altogether on the higher time frame in order to test the 160. If at any time bulls start to fade out, my first bearish target is the 158.300, which is currently 85 pips away from current price. Then I warned you guys this week, our main focus will be the United States dollar news on the 14th, which is tomorrow. We have CPI coming out. And then we also have the up and coming, the Bank of Japan governor changing hands. Okay, so that's another major factor that could play an important role in the price action on GBP-JPY. So with that analysis, when we come over here to the charts, and we're going to start on the 15-minute chart. And you guys can see this yellow circle right here is where I sent that analysis out to you guys. Okay. So you guys can see that you guys had plenty of time to potentially do your own analysis and then maybe contradict it with my analysis and what it is that I was seeing in the market. So let me explain to you guys how I was able to catch this little tiny scalp position here. I'm still floating with about 25% of my trade running. My first initial trade was a 1-to-3 risk to reward ratio. After we broke through the 160 with a nice bullish candlestick and we never retested that, I said, you know what? Let me take 75% off of my trade here. I move my stops to break even, and I'm still floating in this trade with about 1.5 lots still running. Okay. So here was price action yesterday when I gave you guys my analysis. Well, technically in Asia speaking terms, it was today, but here in the United States, it was yesterday. So let me explain to you guys what it was that I was seeing and why I was expecting a potential push up into the 160 psych level if we held above this major psych level, the 159,300. So we're on the 15-minute chart, and what it was that I was seeing was a manipulation move and institutional interest in the form of buys kicking in via the manipulative pattern that we pay attention to here at CYPRX. And then seeing that there are market participants in the market above highs in the form of premium areas where if bank and institutions are going to want to sell, this is my theory, okay? The Bank of Japan is about to change hands in the form of their governor, and the governor, most likely every single time a major monetary position changes hands, the next person in power usually shifts whatever type of policy the previous entity had. So you guys have seen that over the past decade, the Bank of Japan has withheld this ultra loose monetary policy. Most likely what we've been discussing here at the CYPRX YouTube and on the CYPRX platforms is that once that comes into fruition, eventually there's going to be a major shift in the policy divergence between the Bank of Japan and the Bank of England. So as an institutionalized investor, what is that most likely going to mean? They're going to want to sell from highs. So having that in mind, alongside seeing this pattern that I'm going to show you guys I saw, I was looking for price to come up into premium areas where banking institutions sold from previous sessions. And you guys can see I have two highlighted areas, a London session high here on the 15-minute chart and a New York session high here on the 15-minute chart, where I was looking for price to come up into in the form of premium, which we have now done so. Okay, again, having the ideology that the banks aren't going to want to sell from lows, which is where price action was currently operating at. And instead, they're going to want to sell from highs. So basic, simple analysis, right? Buy low, sell high. Okay. Now, 15-minute analysis, when I gave you guys that, again, here was that yellow circle in the GBP JPY chat. I think I sent the analysis out to you guys at like 8:12 p.m. Okay. So that's where price action was. What was I seeing? I was seeing this massive bearish dump that we had fail to break a previous market structure low, which was this low here. And you guys can see that this was a manipulative tactic for the banking institutions to come and grab all of this retail trendline money out of the market from last week. Okay. So in seeing that, and then seeing this higher low get created above the 158.300, which I said to you guys in the chat, we need to sustain a bullish momentum hold above the 158.300 to see any of these higher targets come into fruition. I also noticed that when the market opened, we shot straight down to the psych level, retested this area again, failed to create another low in comparison to this one and this one, and we created a higher high instead. So this is the market maker pattern right here, where we see a sweep of liquidity beneath lows, i.e. all of these retail trendline trader lows here, and the market maker showing us a firmer interest in creating exit liquidity in the market above highs. That means that they're coming to attack retail positions that exist above these levels, or hedge funds or other institutions that have less of an effect in the market than them and have open positions above highs. Why do we come to that conclusion? Because if we constantly see them fail to create swing lows in the market, we see a failure in the market for them to create new lows beneath psychological levels where they're holding quote unquote support above. We have to come to the conclusion that they can only push the market in one other direction, and that is up, right? So that was the analysis given to you guys right here, roughly about 8 p.m. last night during California Pacific Standard Time, all right? So now seeing where price action is currently at now, I gave you guys the bullish targets. Obviously, of course, I kind of underballed it a little bit. Like I said, I don't know why my screenshot didn't go through on the Discord. It's weird. But the original targets of the text I gave you guys was 160.00. You guys can see those targets were smashed right through. Okay. So where I gave you guys those positions at, always attempting to give you guys a move ahead of the curve, was over 100 pips away. All right. Absolutely phenomenal. I personally don't see anybody else on the internet doing that ahead of the curve, actually putting their analysis on the line to their students on a weekly basis. I know that in the past couple of weeks, I've kind of been absent. I told you guys that I've been traveling. I'm actually about to start traveling again next week. So you guys probably won't see my analysis again for, another probably 2 weeks until we get into March timeframe. So now let's go over into London session. I'm not really a London session trader, but because I was up, I was looking at the charts anyways. So once I gave you guys my analysis, I noticed that prior to London session, I told you guys, remember that if London session is going to buy, what do they like to do before they buy? They like to sell first. They like to have a massive sell off first, or some type of selling position first before they buy. And as you guys can see on the 15-minute chart, we had a nice sell-off right before a London session that swept liquidity in the form of an internal liquidity pocket area, and then broke to a new market structure high. So let me just zoom in on that price action for you guys so you guys can see it. Okay. We have a bullish leg on the 15-minute chart from where I sent you guys that analysis. We have an internal area of liquidity in this bullish leg. Prior to this internal area of liquidity on the 15-minute chart, we have a higher low. Okay. The market comes prior to the London session open, sweeps the internal liquidity, fails to create a new swing low in the market, and instead grabs this low and creates a new structural high, breaking previous market structure. This is the definition of bullish order flow. So, like I try and attempt to tell you guys, is to trade in tandem with the order flow of the market and not against it. Don't think that because, like, look how this could have misled you into believing that the market was going to sell off. Okay. If you were, let's say, for example, an order block trader or some type of trader that likes to sell from resistance or premium arrays and not making sure that you're paying attention to the order flow of the market, you could have been looking at some area over here to sell from, some order block, okay, selling from these highs. The market makers know that. In no way, shape, or form is the price action leading up to this move that I took telling you all that price action is bearish. I've already gone over how the market makers are telling you that price action is trending up. They're failing to break below major psychological levels. They're failing to create bearish order flow in the form of lower lows and lower highs. Again, on the 15-minute chart, because I'm a scalper, I was specifically just looking at the 15-minute chart. Okay. So is anybody confused on how I was generating a bullish bias heading into London session? If so, let me know so I can try and attempt to break that down further for you. If not, then let's move on to the lower time frame. Nobody? Okay. So now that we have bullish order flow confirmed, okay, now that we have psychological levels, i.e. in the form of the ideology that the banking institutions, if they're going to want to sell price, they're going to want to sell from highs. So we have logical bullish targets. Again, I showed you guys how I got those bullish targets, extending those areas from previous London. This was a New York session, excuse me, and a previous London session high where banking institutions sold from, and extending those areas over to the right-hand side. We can come to the conclusion that these would be the psychological level majors, 16000 psych levels that they would want to push price into if they were going to sell. Okay. So now let's go down to the 5-minute and the 1-minute chart. All right. So here's a little bit of a more clear perspective on that internal grab of liquidity and that break in market structure. Again, confirming the thesis that I say to you guys, where if London session is going to buy during the manipulation window, they like to sell off. That manipulation window, you guys know that time frame. So in that manipulation window, if you see London session sell off sharply or do some type of sell-off move, but overall on the hourly and the 15-minute price action is bullish, then most likely, again, based off the thesis that I've created and the strategy that I've created for you all, what does that most likely mean for us? That means that London session is looking to get in on a discount. And you guys can see that internal grab of liquidity right here. We see equal highs above these retail resistance areas or equal highs, whatever it is that you want to call them. Okay. They scoop liquidity. That leads to a market A to B move. All right. So with that being said, now we can go down to the 1-minute chart. On the 5-minute chart, we're operating in this A to B move. Okay, so now we're on the 1-minute chart and we're going to pay attention to psychological levels and fractal price action and how it's reacting, how it's creating higher highs and higher lows, and how it's grabbing internal pockets of liquidity and breaking previous market structures. So during the beginning of London session, I never attempt to trade before 1 a.m. here in California. That's just a rule that I've tried and attempted to come by during London session, so that way I don't get caught on any of the manipulation. And I know as an investor that there's always going to be another opportunity if the market is going to trend to scale into a position. So having that patience and that mentality on my side, I was able to see this 5-minute structure. Again, remember this A to B move that we just determined on the 5-minute chart. And then I was able to see that we broke above a major psychological level, the 159.500, and we created an area of friction here that led to another internal grab of liquidity, and break in market structure. So now we're on the 1 minute chart and we can continue to see this pattern that we've been talking about since we've been on the 15-minute chart, which is internal lows in the market makers sweeping those lows and then continuing to push price higher, grabbing any retail money out of the market from people who are selling retail resistance, guessing tops. Okay, so you guys can see how the order flow, not only on the 15-minute, which we discussed, on the 5-minute, but now also on the 1 minute, is continuously making this pattern, which is a pre-engineered low in the market, a sweep of that low that leads to a market continuation, breaking all previous bearish market structure. As retail investors, if we're identifying that this is the order flow of the market, how do we want to get in on that? We want to identify where the market makers bought from, where they broke previous market structure, and we want to get in on some type of discount. Now, that discount array that we attempt to talk about here at CYPRX is taking our fib from the A to B move and waiting for price to at least come down into 62% discount, right? So all I simply did after identifying now off of the 5-minute chart, scaling down to the 1-minute chart, and seeing that this was another internal area of liquidity, breaking above a major. Once we broke all of this previous structure in the form of all these retail traders trying and attempting to sell from these highs here, I said to myself, if the market makers are going to scale back into positions, this is an area where you can see that they facilitated multiple orders to mess with retail traders. They put in one order here, another order here, and another order here. Significantly enough, they did all of this at a what? A major psychological level, right? So if they're going to want to facilitate orders again into the market, my thesis and the way that my brain works is they're going to want to pull price action back after creating, again, internal pockets of liquidity and add another position at where they bought from previous. Well, right here, you guys can see a beautiful internal pocket of liquidity. So simply all I did was I waited for that to happen. I saw this market move right here, this equal low, which was creating another internal pocket of liquidity, just like it has been the past, let's just say 3 legs up since we started on the 15-minute chart. And I waited for those areas to get liquidated and for price to tap into discount. So I took my Fibonacci from the low at the 159.500 psych level to the high where price started pulling back. You guys know that personally, I don't like to buy at 62%. I like to wait for at least a 70 to 79% pullback. Something significant about these two equal lows is look right where they match up with the Fibonacci retracement at 62% discount. So as soon as I saw these equal lows at 62%, what I was thinking to myself is what they're going to attempt to do is they're going to attempt to get retail traders to buy early at a discount when we know where they're going to most likely want to buy from is at a firmer discount from where they bought from previously, where they were manipulating price and filling in orders. You guys can see they filled in an order here, here, and here. So that's 3 times the banking institutions, the major, whatever you want to call them, smart money, put in orders to drive price higher from this psychological level. Why would they want to buy any higher than that? Okay, they're not going to want to do that. They're going to want to buy at a discount. So when I saw this retail double bottom formation or this equal low pattern, all I was thinking to myself was, again, if we've created this pattern where we've grabbed internal liquidity, swept those lows and created new highs, why would they fail to do that again? They're going to do it again because that's how they move the market. So all I did was I waited. I set myself an alarm right beneath these levels. Price dropped straight into 70% discount. Once we started this decline here, I started to put in buy stops above highs. As soon as we surpassed 70% discount, the 150 retested it, broke bullish back above it, and started to create here. Look, now I want you guys to really pay attention. Here's how you can get the confirmation that the move is about to go in your favor and have much more confidence. Number one, what did we fail to do? Where previous banking institutions bought from, what did we fail to do with this price action here? Can anybody tell me what this price action failed to do?
Broke previous structure.
Yeah, it failed to create a new low in the market. It failed to break previous market structure, which is creating a what? A higher low. So that right there should have given you confidence if you were looking to take this trade, that the trade is going to go in your favor. That's one confluence. Again, another little extra added boost to your confidence that you're not trading against the market and instead are trading in tandem with the market, right? Then not only that, but we created again the same exact pattern. We see a low, a sweep of that low, a bullish move that matches the previous bearish momentum, and a higher low that leads to a higher high, higher low formation. Okay, it's the same exact pattern over and over and over again that the market makers must create in order to drive price higher, which is enticing retail traders. You guys can see all they were doing was creating trendline liquidity above highs. Okay, triple touch of a trend line, 1, 2, 3, which gives us even more of a solidification that price is going to go higher, because when we see retail money in the form of trend lines or equal highs trading against the order flow of the market, which we've already confirmed multiple times is to the upside currently, then you have a higher probability for a trade to go in your favor. So right after that, the market came, put me like, let's say 15, I think this is maybe like 10, 15 pips in profit. Yeah, 10 pips in profit. We came back, we retested that. My entry, we failed to create another low in the market, and then we went off to the races. All right. My first target was initially hit right here. You can see 160.00 to the T. As soon as that happened, I pulled profit from the market, about 75% of this trade off the table. That was a 1-to-3 risk reward ratio at first. And right now, currently, I'm floating with the remaining 25% of the trade floating currently. All right. So, I mean, in my opinion, absolutely phenomenal price action. Again, I took this trade starting on the 15-minute and then scaling down. I usually start my analysis on the hourly, but everything was pretty clear to me on the 15-minute. So I just naturally just started on the 15-minute. There was no need to go higher. And that was simply all just starting back based off of seeing that the order flow to the market after this bearish dump. Remember, when you see sharp bearish moves like this, okay, and they don't create new lows in the market, you have to assume that there is no institutional interest in the liquidity that exists beneath these lows. Okay. If the market's not grabbing lows, it's kind of common sense to think to yourself, well, there's only one other area in the market that they could grab, which is highs. So when you see these bearish sell-offs that fail to break previous market structures and create reversal patterns, which is a sweep of all this liquidity in this internal area, higher lows that lead to higher high formations, you need to learn how to move in tandem with that order flow. So before we hop off here, I want to take your attention to a tweet that I put out to you all. And I said, most traders constantly lose money in these markets because they maintain this false illusion that they are battling the markets. The markets are not a finite being consciously aware of your participation. Profitable traders understand that they are always battling themselves in the market. They are aware of their demons, and they know how to adjust their mentality according to current market behavior. So remember in the little tiny explanation I just gave to you guys, how retail traders would be thinking, okay, retail traders that trade order blocks most likely are the ones that will fall victim to this type of analysis, where they think that the market's trading against them, when in reality, they're just not analyzing price action properly, selling from maybe these highs here, okay, or maybe even selling from these highs here or these highs here, which you can see the market makers are literally just toying with people right now, and they're continuously just pushing price action through people's stop losses who are attempting to sell at these highs. There is no indication right now currently that the market is going to sell from these highs. Why? Because there's no structure confidence. There's no bearish price action that has engulfed all of the previous bullish price action. And so anybody that's selling from these highs, what were they doing? They were guessing that the market was going to reverse and respect their analysis instead of moving in tandem with what the market makers are telling you. And that leads me back to the tweet here, which is that most individuals create this illusion that they're battling with the markets, when in reality, they're not. They're just battling their false illusion that they've created in the markets, that the market has to respect some type of premium or discount array that they've made on the charts for themselves. Okay. Never attempt to do that. I know that there's been some traders here that I've helped with in the past battle this. And if when I say that it's speaking to you, then you know who you are. where in the past you used to guess tops and bottoms because you used to think that the market was going to do something because it was in a premium or discounted area. Never do that. Just because price is in a premium does not mean that banking institutions are going to sell from that level. Attempt to get into a position based off of what the market makers are telling you. Well, if all the way down here, we determine that the market makers were failing to sweep liquidity from lows, and instead we're targeting highs by creating this market maker pattern, which is a pre-engineered low, retail money above highs, sweeping those early buyers, and then coming to attack retail money above highs, and then failing to create swing lows in the market, and instead creating higher lows and higher highs, that is bullish order flow. Why would you move against that? Why would you try to sell this? If this is what the market makers are telling you, why would you try to sell, right? So that's my spiel for today.
I won't stop till I hear him say